I'd like to welcome in two special guests today. The first is a professional investor. Back when he was a top producing real estate agent, he ranked in the top 1% of sales in the world's largest real estate organization. And for 4 years, he taught real estate practices and appraisal at the college level. And his investment and development companies, past and current, are probably valued at more than yours. That's over $800 million. He's the co-author of an excellent book that I've read, Equity Happens, and the host of the nationally syndicated radio show, The Real Estate Guys. Think about how often I've recommended you listen to The Real Estate Guys over the years. And that show is now in its 27th year of broadcast, and the podcast version is one of the most downloaded on real estate. It's heard in more than 190 countries, rather. Welcome to GRE, Robert Helms.
Hey, Keith, so great to see you, and thanks a bunch for having us on today.
Co-host of The Real Estate Guys radio show and resident financial strategist. He is an avid student of economics, and his background is really diverse: real estate investing, financing, and syndication. And he is a spectacular teacher. I know that through personal experience. He helps you grow and protect your wealth and income through real estate and real asset investing. Hey, welcome back to GRE. It's been a few years. Russell Gray.
Nice to be back, Keith, and congratulations on the growth of your show.
Well, you guys have had a lot to do with it. And, you know, to you, the listener and viewer here, I called them special guests earlier, and they really are that to me and more. Robert Kiyosaki, he helped me learn how to think. And the real estate guys here with us today, they helped me learn what to do with that line of thinking. So that is the plane that I put Robert Helms and Russell Gray on. And they're also two really giving guys. I even think of them as approaching the heroic because their influence on me has been that substantial and tremendous. So it's hard to overstate how great it is to have you guys here.
It's such a pleasure. Humbling. I remember that discussion we had at the New Orleans Investment Conference when you had just started your podcast. You and I and Beth Clifford were talking, and you told us about it. And look what's happened, man. Just really, really proud of the work you do. We continue to appreciate just the way you approach the market. You know, you call it like you see it, and you get a lot of it right, because I know you study and research a lot.
One thing I think I've helped some people do is get them out of solely the mindset of thinking about investing, and they think about Wall Street and stocks and mutual funds and ETFs and so on, and let them know how real estate's made more ordinary people wealthy than anything else. And sometimes people that are there and they bought single family homes up to fourplexes and have maybe added some apartment buildings. Some people think, well, wait, could I ever be a full-time real estate investor and go bigger faster? And that's something that you guys have been real masters of helping each other with through real estate syndications. Kind of a funny sounding word. It sounds like it has something to do with the Italian mob or something like that, syndication. But tell us about syndication, which is a way for investors to go bigger faster, especially if they want to go full time.
You know, Keith, it's great when folks figure out how to live below their means, invest some of that extra capital into buying a little rental house or two and build up over time. Love that. For some people, they get to the point where they really get the real estate bug. You know, your regular listeners, those folks that have listened since the beginning back in 2014, I think, when you started.
Yes.
And, you know, I think what happens is those folks run out of their own ability to qualify and their own capital. And so they have two choices. They can just stop and wait till they acquire more of those things, or they can figure out a way to bring other people along. And a syndication is a simple idea that just says, hey, rather than each of us go buy a $100,000 property, what if 10 of us got together and bought $1 million property? Now, it's not quite that simple. There's some legality and so forth you need to learn, but it is the way that almost every really large real estate project gets done. Most of the big projects are not done by a single individual or a family. Most of them are done through real estate syndication.
I think there's also a couple of other big benefits, and one of them is the fact that you get to combine the activity of earning money with the activity of investing money. A lot of people who work a day job, they go to work and they put in their day and they earn their money, and then they use their spare time, nights and weekends, to do their investing. That's a lot of your time. when you are a syndicator, you're spending your daytime raising the money, which is how you earn, and investing the money at the same time. And you're investing right alongside your, what we call your capital, or your fellow investors. So that's advantage number one. The other advantage, in addition to getting your time back, is scale. If you've ever run a small business, you know that when you run a small business, you have to do everything. You know, you're the salesperson, you're the accountant, you're the janitor, you're everything. And the key to being able to get out of some of those more menial jobs, or jobs that you prefer not to do, is to have a business big enough to support the payroll, to have the people on board to do those things for you. So you just get to live in your sweet spot. Syndication allows a real estate investor to go there. You bring people on board who handle a lot of the things that you're handling when you're too small. You got to do your own due diligence. You got to follow up on all of the filings and make sure that you know where everything's at. You can begin to bring people on board. So the two advantages of getting your time back are scale, and the fact that you're combining the activity of both earning and investing into one daytime activity.
Now, syndication at its core, I really think about that as the marriage between investors' capital and a deal. And we're talking about real estate here. That deal might be agricultural parcels. More commonly, it might be something like an apartment building, or maybe it's even something like car washes. So maybe to the prospective syndicator, they're wondering, how would I find the right deal? And also, how would I find the investors? And you run an event twice a year called The Secrets of Successful Syndication. So you're very used to beginner questions with syndication. Is that sort of a common question? Are there concerns? And does there tend to be more of a concern with having found the money or finding the deal?
Yeah, good questions. There's two sides of it. One side is, if you're busy doing your job, whatever you do to live, thrive, and survive, and you'd want more exposure to real estate, but you don't have the time to fly around and check out markets and look at properties, then investing passively as a syndication person might make a lot of sense. And in that case, you're going to find a team that's doing the work. On the other hand, the people we spoke about before, people that have real estate experience, they know markets, they've got a team built up, and they could do more if they had more capital. Those kind of folks can become the syndicator and look for the capital. We think of it this way. We think of the horse on a track with a jockey. The track is the market that the property's in. The horse is the deal, and the jockey is the person driving the deal. And that's the person I'm vetting. I want to make sure we're on a good track. I want to make sure it's a great horse. But the jockey's super important. And it's a way that you can get exposure to deals you probably couldn't do on your own when you start to expand your mind into investing on either side of the equation, either the active person that's doing the work and continuing to scale up, like Russ talked about, or if you're just a passive person that says, I got more money than time, I'd rather put my money with a great jockey.
I think a lot of people who get started in real estate investing, when they run out of their own money, it's because they find more deals than there are money. And typically they'll start to wholesale. That's a way that a lot of Main Street investors deal with the problem of having more deal flow than money. They just flip the properties that they can't do themselves to people who can do them. And that's a great way to go. Syndication takes that same concept, but instead of flipping to the investors and just giving them the deal, what you do is you retain the deal and you bring the investors' money to the deal. So a lot of people that are in the wholesale business just don't understand syndication is actually an opportunity for them to stay in the deal that they otherwise couldn't do. Instead of just making a little referral fee or a flipping fee, they actually can get a piece of the action in two different ways. One is you get paid an active fee for running the deal, just the same way a mutual fund manager gets paid a money management fee. And then you also get the carry interest, is what they call it on Wall Street. You get a piece of the action on the back end. If you run the project profitably, then you're going to get a piece of the cash flow. You're going to get a piece of the equity growth. You're probably going to get a piece of the tax gain. How you slice all that up is determined by you, your accountant, and your lawyer, and your investors, depending on what it is they want and what the deal provides. But it's not a lot different than the way a lot of other folks who are already in the space deal with the problem of not having enough money. The other thing that is great, once you begin to understand that problem, just like any person who's out there got a lot of deal flow and you got to go find investors to flip to or to wholesale to. Again, it's the same problem. It's just now you're looking for people who aren't looking to close in their own account. But to your point, Robert, they're going to be people that have more money than time, and they want to have that passive experience, like investing in the stock market, like investing in a mutual fund, but they want exposure to a real asset class like real estate. And of course, syndication isn't limited to just real estate, but obviously we're the real estate guys, and real estate is a great way to begin syndication. We have a lot of people who branch out from there. But there's a lot of advantages to understand how to do syndication. And it's not a lot different than what a lot of Main Street real estate investors already know how to do if they were only aware of the vehicle of syndication.
Russ has begun to touch on the old WIIFM. What's in it for me? It can be quite lucrative for successful real estate syndicators. And when it comes to matching up investors with deals, Robert, I know you've got this great milk and cereal analogy. I heard it myself for the first time when I attended your syndication event back in 2015.
Well, the challenge, if you get into the syndication business, and at first, the typical thing is, I have a deal, I don't have enough money. So most new syndicators, that's their primary focus, is how do I meet investors? How do I find people that will be suitable for this investment? Once you're in the business a while and you have some success and some track record, then what happens is you have more people bringing you money than you have deals. And I just use the milk and cereal analogy where, you get a bowl of cereal and you put some milk in, but you finish the cereal and there's still a little bit of milk left. So you pour more cereal in, and then now there's too much cereal, then you pour more milk in. And the point is, it's never exactly balanced. And that's true for syndicators who do their job correctly. Now, if you don't do it right, there's nobody looking to put money into your deals. But when you do, then you're going to have the problem, and as problems go, it's a good one, of having more demand for your projects than you have projects. And that speaks to the thing Russ talked about, which is scaling. If you're interested in doing bigger deals, more interesting deals, a variety of deals, you're going to need to build up a team. Doesn't mean you hire a big building full of people, but it means that just like now you have a team of property managers and brokers and lenders, you're going to have a team to help out with things like owner relations and the tax side and taking questions from investors. And so it's not which side do you want to be on, it's what works for you and where you are in your career. Most people are never going to be a syndicator, but a lot of people are going to be interested in passively investing, especially those who work so hard to do things like flip houses and build and construct. You can find that passive investing in syndications tends to be a lot easier.
I think if you flip over to the investor side of things, there's some other big advantages. Obviously, we're talking about the advantages to the sponsor or the syndicator, the person putting the deals together. They get paid the management fee, they get paid the carry interest. They have the opportunity to do bigger deals and diversify their own portfolio. But for the investor, they have the opportunity to hold assets that are largely very private. These things are being put into what's called private placements. And so your ownership is recorded in a contract. It isn't part of some database. It's not indexed to your social security number in some searchable database where creditors, predators, taxing agents, whatever can find it. It doesn't mean that you're trying to hide anything. You're just trying to enjoy your rights to privacy through having a private contract. You can use your retirement account money to hold private placements. A lot of people think Wall Street is the only option, but it isn't. You can have tax advantages flow through your investment and give you the opportunity to offset income, maybe passive income you have from some other investments. So there's a lot of advantages to the passive investor as well as to the syndicator in terms of being involved in a syndication.
Yeah, so when it comes to learning about syndications, Robert and Russ have really been talking about both sides of it here. Being the passive investor, one of many investors in a syndicator, say, 150 unit apartment building, something that seems daunting for you to buy yourself, and with ownership in a syndication. Therefore, you could become a passive investor, or you could be that syndicator itself. Sometimes a syndicator also goes by the name the sponsor or the general partner, the person that's legally aggregating that investor capital together. And if this sounds of interest to you, the listener and the viewer here, I know what you might be thinking. Maybe you're thinking, whoa, this is over my head. I don't know if I'm ready for this yet. Is there some credentialization where I need some certificate or some degree? We're going to learn the answers to all those questions. If that's what you're starting to think, you're listening to Get Rich Education. Our guests are the real estate guys, Robert Helms and Russell Gray. More when we come back. I'm your host, Keith Weinhold.